and the green recovery. Before I hand over to our chair, I just want to flag a couple of technical issues. It is a webinar, so if you have questions, please do put them in the Q&A. We'll be monitoring that and going to those at the end of the panel session. We will be recording this and hopefully putting it on our website quite soon. So I am very pleased to introduce our chair for today. Caroline Lucas doesn't need much introduction, but she is the UK's first Green MP and former leader of the Green Party. She was also formerly a member of the European Parliament from 1999. Many of you will know her also as a committed campaigner working for climate action, nuclear disarmament, women's rights, animal rights, global justice, and probably many more issues. Each of our speakers will have 8 minutes, and then we hope this will leave plenty of time for questions. So Caroline, over to you. Thanks.
Thank you so much, Ruth. I really appreciate it. And it's a real pleasure to welcome everyone today. I'm really looking forward to hearing from our 4 speakers. I will introduce them in just a moment, but first I just wanted to set the scene a little bit and just to start really with some stark truths. To limit global heating to below 1.5 degrees, the world will need to decrease fossil fuel production by at least 6% a year between 2020 and 2030, basically this decade. And that's according to UNEP's production gap report. But that same report found that governments plan to produce more than twice that amount of fuel by 2030 than is consistent with staying below 1.5 degrees. So every warning light on the dashboard is flashing red. To quote Greta Thunberg, our house is on fire. And yet the economic and political apparatus that perpetuates business as usual has yet to be dismantled. And as you will know, rather than keeping fossil fuels in the ground and reclaiming our future, we are still hurtling towards catastrophe. We are still enabling and incentivizing the extraction of new oil and gas and coal, enabling and incentivizing the pumping of new pollution. So from subsidies dressed up as tax reliefs to revolving doors between the corridors of power and the fossil fuel companies, from high street banks propping up the polluters to net zero being weaponized. And then today, the focus of our discussion right now, there are also the rules of international trade, which stack the odds in favor of fossil fuels still further, with mechanisms which massively benefit the industry and its investors. Fossil fuels are the past, we know that, and those frankly who are running around reinventing and rebranding themselves know it too. You might have seen just this week that the Oil and Gas Authority has now dressed itself in new clothes. It's become the North Sea Transition Authority, but frankly, until it stops trying to extract every single drop of oil and gas out of the North Sea, then no amount of rebranding is going to get us where we need to be. But change is coming, and forward-thinking governments and businesses are beginning to commit to phasing out fossil fuels. But the pace of that change needs to match the climate reality. And essentially the obstacles to change need naming, shaming, and replacing. Obstacles like the Energy Charter Treaty, which exists specifically to protect energy firms, or indeed obstacles like the hundreds of free trade agreements and bilateral investment treaties that we're going to be hearing about today in more detail. We have a panel of wonderful experts. As you've heard from Ruth, they each have 8 minutes, and I'll be keeping them to time, so we have plenty of opportunity for questions afterwards. I will introduce each speaker before they present, and so without further ado, let me introduce our first speaker. Miriam Brett is the Director of Research and Advocacy at Commonwealth, a think tank designing new ownership strategies for a democratic and sustainable economy. She is Research Fellow at the Wellbeing Economy Alliance. She previously worked in international finance for a critical watchdog to the IMF and World Bank, and her recent work has challenged fossil fuel subsidies and highlighted the importance of public ownership in securing our transition to a sustainable economy. So Miriam, 8 minutes, over to you.
Thank you so much, and thank you for inviting me here. I'm going to be speaking about the energy crisis in the context of the energy crisis, looking at the domestic and international action that the UK can and should take, and how we can go about doing this. Now, throughout this presentation, I'm going to be drawing heavily on Commonwealth analysis by 2 fantastic academics, Joseph Baines and Sandy Hager, as well as a report that I co-authored on a climate retrofit for UK trade with Katie Glogally-Swan. Now, While we're seeing new vulnerabilities being exposed in the energy market, the problems embedded in the energy market did not start with this crisis. From the lack of gas storage capacity, leaving the UK incredibly exposed to volatile global markets, to longer term rises in gas bills and longer term growth in the profit margins of energy firms, it's clear that the ownership and operations of our current approach to energy point to deeper systemic failures of a privatised market and its implications on energy security, on our sustainability, on supply, and on affordability for households. And recent work by Commonwealth has highlighted this. So to understand who benefits from the privatised ownership model of energy, we need to look at how the earnings of energy firms are divided among stakeholders. Over the last 10 years, the big 6 energy companies, for example, have paid out almost £23 billion in dividend. That's 6 times their tax bill for that period. BP and Shell have remained profitable for the past decade and spent tens of millions on shareholder payouts while receiving money for fossil fuel subsidies and support. And another group of important players in the system are the major electricity distribution network operators and the gas distribution networks. The dividend payments of major DNOs totaled to £3.6 billion from 2017 to 2021, and for GNDs, that amounted to £2.4 billion over the same period. So we're seeing astronomical sums of money channeled up here. Now, amid the current context, there is a real chance that we're going to see, and I think we're already seeing, a knee-jerk reaction for the need to accelerate oil and gas extraction in response to the crisis, deepening our reliance on fossil fuels when its instability has been exposed, and most importantly, as we face the challenge of averting the trajectory of an unlivable planet. Now, immediate measures can and should be taken. People should never be forced to choose between heating their homes and putting food on their plates, and support measures for households are desperately needed. And this could be facilitated by, for instance, a windfall tax to help lower bills. And in the longer term, we need to look at investing in a comprehensive just transition strategy that aligns with a 1.5 degree pathway. Now, how this is carried out and who benefits really matters. This moment should be a wake-up call to nurture new infrastructures and industries of the future that are centred on democratic ownership, on climate and environmental resilience, and on shared prosperity. Now, it would be remiss of me not to point out the absolute failure of yesterday's spring statement to tackle the devastating energy bill crisis facing households the length and breadth of the UK, to challenge the deep fault lines designed into our energy system, and to harness the many, many opportunities presented by a rapid and just transition. And how does this all relate to trade? Well, far from the way it is often presented as a simple rules-based system for an exchange of goods and services, we know that trade and investment actually encroaches on policy space and regulatory space and everything from our public services to labour rights and, of course, climate and environmental protections. And power is coded in legal frameworks that can boost corporate profit and protect their power, and deepen power imbalances between wealthy and poorer countries and between multinational corporations and workers on the front line of climate breakdown. This is particularly important for the UK's current context because, having gone from being part of the world's largest single market to negotiating trade deals alone amid an economic crisis, the UK's negotiation hand is substantially weakened. And there's a danger here that in the rush to secure new trade deals, we're simply looking to secure them rather than actually prioritising the details in those trade deals. And having contributed to the majority of historic and current carbon emissions, there's an enhanced onus on wealthy states like the UK to rapidly decarbonise and do so in a way that plays a fundamentally different role in the international economy, away from one that's rooted in power imbalances and towards a reparative agenda of climate and environmental justice. Now, there's a host of measures needed for this, and I don't have time to cover them all, so I'm going to focus on the need for a UK industrial strategy that can help tackle the current energy crisis as a way to lead our trade and investment strategy. Because in order to enact a climate retrofit for the UK, we need UK trade, we need to lead with a green industrial strategy that actively leverages policies in the most impactful way to guarantee we meet our commitments on sustainable development as well as decarbonisation. First, the first measure here is to decarbonise economic activities, and second, to change consumption and reduce emissions. Third, to scale good, green, unionised jobs and industries across the UK. And last, to root out intersectional inequalities as we do so. Now, there's a whole range of measures we could enact to bring this about, and I'll touch upon a few of them. There is an urgent need for a rapid and just transition away from fossil fuel subsidies and support, which research by Commonwealth and NEF found has not drastically decreased since the Paris Agreement was signed. These subsidies could be redirected to affected communities and channeled to investment in publicly owned green energy projects to start us on a path towards a more fairer, equitable energy system. We need a clear strategy for winding down fossil fuels and maximising our renewable potential by scaling industries and infrastructures of the future while creating millions of good green unionised jobs in the process. And last, as a global financial hub, one of the key drivers behind perpetrating climate breakdown, the UK needs to undertake a comprehensive assessment as a core component of the Green Industrial Strategy of how finance can be rapidly decarbonised. I'll finish off by saying that the scale of transformation needed to bring about this change is vast and exceptionally challenging, but a systemic crisis requires a systemic response, and now is the time to change the course. Thank you.
Brilliant. Thank you so much, Miriam. Huge amount of food for thought in what you've just said, so thank you. I'm going to move us on very quickly because I know that Juliet needs to leave earlier than others. So if I can come and introduce Juliet right now. Juliet Davenport OBE is the founder and former chief exec of the award-winning green energy supplier Good Energy. She's worked for the environmental consultancy Energy for Sustainable Development and at the European Commission and the European Parliament, covering energy policy and carbon taxation before setting up green energy. She's now the chair of the Rooftop Solar Innovation Company, which I think is pronounced Atrato On-Site Energy. It's the first company with an all-female board, just like our all-female panel, which is lovely, to be listed on the London Stock Exchange. And she hosts the podcast Great Green Questions. Let me just say as well that she will take questions straight after her presentation because she needs to go. So yeah, put them in the chat now. And over to you, Juliet. And you're on mute, of course. I still can't hear you. It might just be me. We can't hear you, Juliet. No, you're definitely on. You're definitely on mute now.
Can you hear me now?
Yes,
it was my earphones that weren't working. Apologies. So, Caroline, thank you so much for that introduction. And apologies, I have to disappear, but I'm actually in somebody else's offices, so that means it's a bit tricky. So, coming to the discussion that we're trying to enter into here, we're at a really interesting point where two major influences on energy have come together. One is obviously the carbon agenda, which Caroline, you outlined, and the emergency that is emerging. Well, it's been emerging, to be honest, for the last 30 years, but we're really beginning to see it now, day in, day out. And the security emergency that we've seen coming out of Central and Eastern Europe and sort of progressed across the whole of Europe and worldwide in terms of energy crisis. And sort of what I want to talk about is some of the thinking around, okay, so how do we accelerate through this in a way that takes everything with us? Because one of the key issues that I've seen, particularly in the UK market, and I think it applies to a lot of different sort of energy markets worldwide, is that quite often we've seen renewables and zero carbon promoted through one particular part. And you can't shift markets the pace that we need to do it and the fundamental changes that we need to see if you only affect one part. You have to kind of look at the holistic part. And so when I look at a marketplace, when I look at the energy marketplace, I break it down into kind of 5 key areas that you actually need to press. So one of the first ones, which is often forgotten, particularly about the industry itself, is research and innovation. So we spend a huge amount in this country on research and innovation. We have a target of, I think it's about 2.7% of GDP to spend on research and innovation. And if you look back over the last 10 years where we've spent that money, the majority of that money has gone on automotive or aerospace. A very tiny percent went on zero carbon, and the rest on sort of pharmaceuticals and other areas. So the point is that we haven't been investing in the technologies that we're going to need tomorrow. And it's not just the technologies. When I talk about technologies, I actually mean the interface to humanity as well. So this is about researching on how do we actually support people to change behavior? How do we support the deployment at speed of new materials in people's homes? How do we allow people to use their metering correctly so they can actually respond to pricing? How do we make it easy for everybody so you get that inclusivity and fairness? And our research innovation has not been doing that heavy pulling for the last 10 years. We've seen a switch on that in the last year and a half. So we're beginning to see that shift. Funding is being funneled into this area, but we need to continue on that path and make sure, because this is about, we need to be taking action today completely, but also the next 10 years, there's continuing action. This is not a point in time that we get to at 2050 when we're targeting zero carbon. This is, we've got to carry on through that and beyond that. This is about completely restructuring the way we operate materially in the world. The next part is the infrastructure. So infrastructure in the UK was built in a high carbon world. So we have a bunch of electricity cables that used to take power from very large power stations to individual homes. It didn't tend to take the power the other way. So essentially that whole infrastructure and the way it's been incentivized and looked after has been built in a completely different construct. We need to reverse that so that actually renewables by their nature are decentralized. We can deploy them in our homes. So you get that democratization of energy that really feels like the holy grail, particularly when we see the impacts that security has in this market. The next piece is the regulation. So if you look at most regulations relating to the energy market, carbon is not webbed all the way through it. So you have some specific regulations that commit to zero carbon. But then when you get into the detail, and quite often, I think there's 11,000 pages of regulation in the UK on electricity, making sure that every single part of that is pushing us in the right direction is super hard. And actually, there's some quite good principles that we could adjust. For example, by giving our regulator a remit on zero carbon and delivering it. That's a very simple, straightforward process. And I think that's not just the UK, that's any country. Their key regulators should be thinking about that through everything they do. The next piece is energy users. Now, energy users has been dismissed. There's various arguments I see on energy users. Energy users have been dismissed by the industry generally as not responding to pricing signals or not responding to requirements on reducing or changing behavior. To the other extreme, where I've said, I see people say, well, it's not the responsibility of households to do anything on this, it should be a government responsibility. My personal view is everybody needs to be involved. We can't do this alone. We need governments to do their job, but we as users should also do our job. And we need to be able to make that easy. Technology does help. So if you have something that will automatically switch off something that's left on, whether it's a light or whether it's the way you're charging your electric vehicle, whatever level it is, we need help as consumers to be able to do that. And so we need to think through, how do we introduce that, and how does both the regulation but also the propositions out there really push us towards being able to make the change we want to change. And then finally, one of the things we're going to need is a huge amount of skills in this marketplace. So what we don't have right now is we don't have the right skill set coming out of universities and out of these colleges. Technical colleges are beginning to fill that gap, but not enough. We do need more engineers. We need more female engineers. Really, this big call out for female engineers, because if we're going to go to zero carbon, particularly on heat, we're going to need a lot of heat pumps. Somebody's going to have to install them all, and that is going to be so important in terms of that. And we don't have that skill set in the UK and across Europe at the moment. So that's just a very quick high-level shot of the kind of 5 key areas that I think we have to move forward. It's not just one or the other. All of those areas need to shift, and that's both in the UK but also European-wide.
Fantastic, Julian. Thank you so much for such a comprehensive view in such a short time. Fabulous. And I really love the idea of the just something so simple as giving the regulator a duty for net zero. It's kind of such a no-brainer. You'd imagine that's already there, and it clearly isn't. Do you have time for 2 questions, which are in the Q&A?
Yes, I do.
Lovely. So the first one is from Connie Muir, actually, who's talking about community energy. And saying that it's clearly going to play a huge role in improving collective resilience and independence, and asking in a sense, given that's also a no-brainer in a way, why do you think government's not doing more to empower communities?
So it's a real shame, because there was a point when, under something called the feed-in tariff, there were specific community support carved out, and we actually had almost the beginnings of a thriving community energy scene in the UK, which was then cut short. It was such a shame. So that we lost it under that. The other thing, and I've seen some really interesting models coming forward on this, is this kind of idea of energy sharing, and that comes back to the regulation again, allowing that to happen. So can I actually sell my energy to my next door neighbour for a better price than they could buy it off the network? And that those kind of innovations we're beginning to see come through, and in fact the regulators thinking about them, but they haven't got their heads around how to really deliver that. And that I think is a real opportunity and really exciting, because then if we could get together, if we had a street, you could get together, you could go and buy solar panels together, maybe get your local bank to fund it, and then buy and sell the power between you.
Actually, it makes me think as well that maybe that's a really good ask of this energy security strategy that we're expecting next week. I mean, if they were to give the regulator those kinds of powers, that could then kind of trickle down, and then we might actually have a framework that was fit for purpose. Gwen also has a question. She says, do you have some examples of fault lines in our energy systems, and are they unique to fossil fuels? I know you've touched on quite a few. I don't know if there are any more that you had in mind.
I mean, I think in terms of the energy system as the way it works today, I mean, I think there are a lot of fault lines, to be absolutely honest. I mean, the partial issue is that we built an energy system in a different world. And so when you look at something like the capacity market, that was built to build big power stations, not necessarily to deliver local flexibility. So it doesn't brilliantly help demand side response, and it doesn't really help local flexibility, like local battery sort of trading. So there are pieces that need to be rethought. I know that there are organizations that are now trying to come together to bring those different voices, because one of the biggest problems is when you have this immense technical detail, it tends to put off most people. And so therefore the voices around the table tend to be the big players. And that is one of the biggest issues I've seen forever in this industry, is actually representing the smaller players, or the people who don't exist yet. The players of the future has not really been effectively done, which means that you tend to have a drag on a system in terms of its change. And for me, that's what government really should be that thought of the future. One of the things we've always had is the regulator is meant to be protecting vulnerable customers, which is incredibly important, but it's done that at the detriment of trying to think about that future customer. And somehow we need to get that balance between the two. And I think the protection of the vulnerable customers should be an overall market concern, government concern, where we look after those customers, but that shouldn't be at the detriment of trying new methods for the whole market, for the benefit of the whole market.
Fantastic. Thank you so much, Juliet. I know you need to go quite shortly, but I'm really, really grateful to you for joining us. Thank you so much.
Thank you, Caroline, and thank you, everybody.
Thanks. Okay, so moving on, I'm going to now invite Jean Blaylock, who is the Campaigns and Policy Manager at Global Justice Now, to share her thoughts with us. You know, I'm sure that Global Justice Now is a democratic social justice organisation working to create a more just and equal world. She's campaigned on trade policy for 15 years, exploring environmental issues, food rights, justice for the Global South, a leading coordinator of pan-European efforts to scrap the Energy Charter Treaty, which is a trade and investment agreement that threatens to hold back the phasing out of fossil fuels. So Jean, over to you. Thank you.
Thank you so much. Yeah, the headline version of what I'm going to talk about is 5 fossil fuel companies that we have looked at are suing governments in secret tribunals that are written into trade deals over climate action and climate policy. And just those 5 companies are suing for a massive 18 billion. And we already have admissions from 2 countries that their fear of being sued in these tribunals has led them to be weaker in their climate policy and their climate targets than they would otherwise have been. So that's the short version. To say in a bit more detail, these secret tribunals, they are, the term in trade jargon is investor state dispute settlement, or ISDS. These can be written into wider trade deals or into more focused investment deals. Of the 5 companies, 4 of them are using one deal, which is the one was mentioned earlier, the Energy Charter Treaty, which is a particularly large investment deal focused on energy investments between around 50 countries. And it's an obsolete, it's a 25-year-old deal that is now increasingly becoming a barrier to the energy transition because of the way that the fossil fuel companies are taking advantage of it. And it's something we need to get rid of if we are to be able to take the action that's needed at the speed and in the way that we need to be doing it, as people have just been talking about. To talk a little bit about a couple of those cases to illustrate in a way some of the problems. So one of the companies that is suing is a UK registered company called Rockhopper, which is suing the Italian government over a ban on offshore oil drilling off close to the coast of Italy. There had been, many protests around the oil rigs and the oil drilling, and this ban was introduced, and the company has turned to ISDS to fight back against that. But one particular point to note is that they are not suing just for the amount that they have invested, which would be bad enough, but they reckon that they invested around 40 to 50 million, but they are suing for 300 million because they are saying they're looking at the value of the oil that they say is in the field, and if they were able to extract all of that, and if there were no accidents, and if the oil price held up, and if basically their most optimistic scenario, that's what they reckon they could make. So that's what they're suing for. And this is one of the reasons that ISDS is attractive to corporate courts in the first place. You can sue for much higher amounts than you could if you decided to bring a case or a dispute within national courts, which is bad enough in itself. But it is particularly alarming when you connect it with the idea or the concept that's becoming increasingly important within climate campaigning of stranded assets. So, I mean, as Caroline was saying in her introduction, we know there is so much fossil fuels that need to just be left in the ground. We need to be changing. We need to be moving away. And these energy companies have assets on their books that they know these are oil fields or drills or whatever that they can't use. They need to leave it there, or they ought to need to leave it there. They have infrastructure that needs to be decommissioned. They have all of these things that ought to just be written down on their books. But if you're a company with these things and you're going, well, I could just write down the whole loss, or maybe I see a way in which I could make money out of it after all by bringing a case and suing for millions or billions, and then I can turn a profit after all. And that, I mean, particularly when you look at the scale of the issues around stranded assets, which are in the trillions, this is, it's alarming. Another 2 linked cases. The Dutch government is phasing out coal power. And it is being sued by 2 energy companies, RWE and Uniper, who own coal power stations. And the thing that I want to highlight here is, as soon as the Dutch government said that it was going to do this and introduced the plans for legislation to enable that. Uniper and then RWE started being very public about their threat that if this goes through, we will sue. And the ISDS system is a very secretive one. It can be really hard to find out what's going on, what's happening at all. So when a company instead chooses to shout very loudly about what's happening, the suspicion is that they are aiming for a chilling effect. They are seeking to use the threat of bringing a case to bully governments into changing their plans. Sorry. So when they initially started doing this, I feel that they may have been aiming very directly at the Dutch government in the hopes that before it actually introduced this law, they could be persuaded to back down in some way. The Dutch government did not. The Parliament passed the law. It's coming into effect, and again, the companies are very public about the fact that they are now bringing these cases and that they are suing for more than $1 billion each. And in that case, that chilling effect now is aimed not so much at the Dutch government, but as every other country in the world who is watching this happening and thinking, oh, those plans that we had, maybe we will not do so much or so soon, or we will be a bit more cautious, or we will tone it down a little bit. And this is something, I mean, this is not new or unique. This is something that people have written about this effect with previous ISDS cases in other sectors, most notoriously probably when Philip Morris tobacco company sued Australia over plain packaging on cigarettes. And while it did so, every other country in the world suddenly slowed down on their own plans on plain packaging while they waited to see what happened. And Philip Morris lost that case on a technicality, but that was several years lost while that case, because it takes a long time to go through. And when you look at how much time we have lost on climate action already, we cannot afford several years. But more worryingly, I read something recently that said that chilling effect with the Philip Morris case lasted for the duration of the case in rich countries, but in developing countries, it lasted much longer and is to some degree still going on, because those countries know themselves to be far more at risk. It costs millions just to fight a case, let alone the risk of losing. So that chilling effect is really quite profoundly important. And this is what we have just said. Just in the last couple of months, the Danish and the New Zealand climate ministers have publicly admitted that they, so in one case, they set their climate targets later than they would have preferred to have done. In another, they did not engage in some of the initiatives around COP26 because of their fear that this might lead to them being sued. And that's probably the tip of the iceberg. So those are particular concerns with ISDS, that it makes the climate transition more expensive, and it also puts an additional barrier that can actually block climate action from this fear of being sued. We need to get rid of it, and we can. The Energy Charter Treaty that is referred to, because of controversies that have been brought up around it, there is a process at the minute of looking at what can be done with it, and several countries have said that they were considering actually exiting. Italy has already left. If enough countries could just leave the treaty, it will collapse. There is also the issue, of course, for the UK with the new trade deals that the UK is doing to not put ISDS into these new trade deals. Around the world, other governments have taken steps to start getting rid of ISDS. India, South Africa, even the US, New Zealand, Tanzania, Bolivia, all of these countries have taken action. It is possible, it can be done. The UK government needs to step up and join them. Stop there.
Fantastic. Well, not fantastic. I mean, that's just so shocking. Really, really worrying. And it just makes me just really reflect how little we know about all of this. You know, even good, respectable media operations just don't seem to be covering this stuff. So thank you so much for shining such a strong light on it, because it really is shocking. Now, finally, and thank you for your patience, Carolyn Deere Birkbeck is a Senior Research Associate at the University of Oxford's Global Economic Governance Programme She's a director of the Forum on Trade, Environmental Sustainability and the SDGs based at the Geneva Trade Platform, and a consulting fellow of the Global Economy and Finance Programme at Chatham House. And she conducts research on the politics and governance of global trade, environment and intellectual property, and is developing a forward-looking agenda on trade and sustainability, which sounds like something we need very urgently. So I'm delighted to hand the floor to you, Carolyn.
Great, thank you so much, and thank you for that kind introduction. So I wanted to focus my remarks on where the World Trade Organization fits into this picture on trade, climate, and an end to fossil fuel use. So the starting point for this discussion, or from my remarks, is that there is long-standing silos between trade decision-making on the one side and climate decision-making. These silos are there at the national level and also at the international level. And they reflect a more a broader breakdown of integration of economic and environmental decision-making. So at the international level, you don't have any systematic cooperation, for example, between the UN FCCC process, which is the climate change process, and discussions in the multilateral trading system, which is the WTO. You have liaison, you have some interaction, people speaking at each other's events, but there's no active collaboration on shared agenda items. And nor is there at the level of most national governments. So it's very hard to have coherence at the international level if you don't have coherence at the national level, which is why it's so important for countries nationally, like the UK and others, to have trade strategies where environmental and climate issues are embedded in those strategies. So what I quickly want to look at is just the state of play at the World Trade Organization, the recent statement on fossil fuel subsidy reform, and also the ongoing work at the WTO on climate. So over the past 2 years, there has been growing engagement of countries in discussion of trade and climate at the WTO. This interest has intensified partly because there's a lot of concern among many WTO members about the trade impacts of a growing range of climate measures. On the other hand, there's also a recognition that that the urgency of climate action calls for greater attention to how trade and trade policy can help, and where they can be sort of harnessed to meet the challenges of climate mitigation and adaptation. So there's basically this sense that climate issues are there, they're going to be central to trade, to competitiveness. Many companies recognize that if they want to compete in global trade, they will need to respond to the many environmental requirements and to consumer demands on that as well. So a key point to understand in the multilateral context is that there's a strong view from many developing countries that are the majority of WTO members that the costs of climate action must be shared fairly. And the discussions of trade and climate must reflect the principles of the Paris Agreement, but there should be common but differentiated responsibilities. And what countries are expected to do should be linked to their capabilities. So here a key point to note is that there are many developing countries, many African developing countries and LDCs that are highly dependent on fossil fuels for their export revenues, which they use to finance development and also to service their growing foreign debt. So these issues are very much interlinked. Many also don't have access to cutting-edge decarbonisation and energy efficiency technologies that they need in order to decarbonise production. They don't necessarily have the resources to finance R&D, to provide subsidies, use industrial policies to promote low carbon transition. And their businesses can't often attract the private investment needed to access and use technologies and invest in greener production. So that's just a little bit of scene setting. But all of that said, there is growing engagement. In late 2021, there was a ministerial statement on trade and environmental sustainability, which was co-sponsored by 71 WTO members. And this is the significance of this is in the 25 or more years of the WTO, there's never been a ministerial statement on environment issues. And there's certainly never been a statement that mentioned the word climate and the importance of climate action. So it was really a kind of landmark thing in the WTO context. It didn't involve the full membership, but the 71 was significant. And alongside 45 countries agreed to sponsor a statement on fossil fuel subsidy reform. Now, both of these statements are not launching new negotiations as such, but they're seen as a space where members can identify areas for strengthened cooperation and hopefully incubate more concrete outcomes. So to try and be super quick, I won't go over you're all aware of the the problems around fossil fuels. So I won't go back, I won't repeat all of that, but I think a key piece of the puzzle for reducing fossil fuels is to reduce subsidies to fossil fuels, as we saw in the Paris Agreement, the Glasgow Climate Pact, which calls for a phase down of fossil fuel subsidies. Now, a driving focus of most activists working on this is to get national reforms underway, and there's an array of ways to do this, as other speakers have said. But at the international level, one of the challenges is that many countries fear taking action alone that will make them less competitive or mean that they bear greater costs than other countries. So this idea that you need to do this cooperatively and you need many countries to act together. And so some of the things that countries are doing to mount, there's a number of initiatives to put international pressures and commitments. There's peer review processes at the G20, there's commitments at the G7, there's initiatives like the Beyond Oil and Gas Alliance. We also have monitoring initiatives at the OECD and something called the Global Subsidies Initiative to try and track what's going on, again, to put peer pressure. There have been some really specific efforts in the trade arena. In APEC, for instance, the trade ministers agreed to explore options for a voluntary standstill on inefficient fossil fuel subsidies. That was in 2021, and there are 6 countries negotiating the agreement on climate change, trade and sustainability, where fossil fuel subsidy reform is one of the topics that they're discussing. So in the WTO context, what I think sort of the end game, the reason this came to the WTO is the WTO has something called the Subsidies Agreement, and there it provides a set of rules for getting countries to work collectively to reduce harmful subsidies. And so the idea that that countries are pursuing is whether that set of subsidies rules could be used as a legally binding framework for reducing fossil fuel subsidies. And we're a long way from that, but the ministerial statement was significant because it had 45 members. It includes the EU and the UK, which is the first time there have been G7 members signing up for this process. And it includes a sort of diversity of other countries. And what they aim to do really is to try and build a multilateral sort of consensus and supportive environment for achieving in the future ambitious and effective disciplines. That may sound pretty long-term and not very inspiring for those of you who want to see action faster, but as part of this process of trying to build collaboration, it's really important. And just last week I was listening to one of the developing countries, who's heavily invested in the fossil fuel sector, saying, their country recognizes they need to do this, but they need to understand a lot more about how to do it. In many countries, there's huge political economy questions around how you go about this process, especially for communities and workers in that sector. And so there's a great interest in understanding more what are the options, what would be most effective, what are the priorities. So that process is ongoing, and they will have a series of meetings this year to try and advance that work. And then in just 1 minute, the other statement is the statement on trade and environmental sustainability, which includes 71 members. And here what's interesting is it includes the world's 3 largest trading powers, the EU, China, and the US, and again, a broad range of other members. The really significant thing was that the statement explicitly says that international trade and trade policy must support climate goals. And it provides a roadmap for future work, including a high-level event at the end of this year. They, again, they've called for dedicated discussions on how trade-related climate measures can contribute to climate goals and commitments. They've also instructed participants to explore opportunities to promote trade in environmental goods and services that can meet climate goals, and to help the uptake of new climate-friendly technologies. And they've also committed there to look at the environmental effects of subsidies. So fossil fuel issues may also be discussed there. And so there are working groups on these topics that will be advancing this year. So I should probably stop there, but I just wanted to give you an update on sort of what's happening in that landscape. Whilst it may not deliver short-term wins, I think the important thing to recall about the WTO context is it's the only truly multilateral context where you have a vast diversity of countries from around the world. So work is always slower, but work there, even if you don't achieve new rules, you achieve a lot of, you can achieve a lot of understanding and peer pressure, and also collaborations that will help drive reform nationally, which is ultimately what it's all about, is making the change happen at the national level. So thanks so much.
Thank you so much, Carolyn. And I guess that is positive, although, as you say, it's taken a heck of a long time to get there. I remember working on trade issues for Oxfam back in 96 and 97 and trying to urge the WTO then to take on board environmental issues. So it's good to know that sometime later they have. There are two questions straight away in the chat, which I will quickly put to people because we are running out of time. Jean, there's a question for you that you might have seen, which is just, quite understandably saying, are these ISDS cases illegal in any way? Because it does sound that they are shocking. My sense is that they're not, but maybe you can tell us about that. And maybe I could just add as well, is there anything you can tell us about the UK company? Did you say they were called Rockupper or something like that?
Rockupper.
Yeah, can you give us a minute on those?
Okay, sure. So illegal is, I think the whole system is unjust and shouldn't exist. So in that sense, the cases, it depends. So another climate related case, fracking company called Lone Pine is suing the Canadian government over a fracking moratorium in Quebec. And they are actually on record as saying, somebody asked them, well, why are you not suing in the national courts? Well, there were a couple of reasons, but one of them that they just openly said was, well, but the Constitution of Canada is written in such a way that it makes it very clear that the government has complete control over the ground, below the surface of the ground, and the licenses, so we would lose. So they're taking it outside of the national law and a way to circumvent the constitution of the country by taking it to a corporate court instead. In general, one of the issues with ISDS is that an ISDS tribunal just has to look at whether the investors' interests have been affected. It doesn't have to balance it in the same way as a national court would against sort of like, well, on the one hand, private interests, but on the other hand, the public good and the public interests. So when Philip Morris sued over plain packaging, they did also sue in the national courts. And if you look at the judgment there where they lost, and you do Control F on public health is all the way through the document, because the whole thing is about private interests, but public health. The reason for them then taking it on to an ISDS case was that there they could get away from that concern with public health, because the ISDS tribunal can go, well, that's interesting, but I'm only looking at whether the investors' interests have been affected. Rockupper, so Rockupper is a small oil company. It is registered in Salisbury. Exactly how much of actual presence in this country it has, I'm not entirely sure. It's one of the things that I find quite worrying about them is that, like quite a few of these kinds of oil companies, their main interest is a couple of fields. So one of their main interests was this field off Italy. At the moment, they're in quite a rocky financial position. If they win this case, a judgment has been expected for the last few months, that will give them a load of money, which they would then use to open a new oil field off the Falklands, where they have an interest. So in that way, this case would actually even further fossil fuel extraction.
Thank you, Jean, that's really helpful. Okay, so the next question is nominally to Carolyn, but I was also going to ask Miriam to come in on it as well. So the question from Thomas Wills is, there are obviously some ongoing initiatives in the WTO context, but it's been extremely slow to change over the past 20 years. Is there any possibility that these initiatives will get the support that they need from WTO members to have a real impact? And when it comes to the fossil fuel subsidy aspect of that in particular, I just wanted to ask Miriam whether there's a connection between the ongoing kind of domestic campaigns and lobbying to try and get rid of UK subsidies, and whether or not we could use anything that's happening at the WTO to help us domestically as well. But I'll come to Carolyn first.
Thank you. Yeah, Thomas, it's a great question. I mean, look, the fishery subsidies negotiations at the WTO have been going on for 20 years and they're not yet resolved. So in that sense, I am not optimistic. However, I feel that we are not going to solve climate and trade issues unless we seek to do so cooperatively and internationally. We can't have every country either just erecting trade barriers to this, that, and the other, or coming up with its own set of standards. We need to do those things internationally. We need to do that so that, that's the only way we're going to have impact on these problems. So I think we have no choice but to try. And I think it's a really massive shift, really a massive shift, that there's really discussion of these issues at all among the players that you're seeing at the table. I think most of the action will continue to take place through national reforms, through bilateral agreements, and through regional or other approaches. But the multilateral framework is a really key one for trying to sort of steer the broad ship and keep a sense of general direction and where we're heading to. I think there are very concrete outcomes that that could come up. I mean, the agenda is very broad. You've got everything from trade and technologies that countries desperately need for climate adaptation. I would hope we can come up with some solutions to things like that. But I don't think that we're going to get an immediate set of outcomes out of there, but I don't think that one should judge the success of the WTO in terms of whether or not you get a new trade deal or a new rules or a new liberalization. I think that's kind of an old-fashioned way of looking at the purpose of multilateral cooperation.
Thank you. That's a really interesting way of looking at it. Thanks very much. Coming to Miriam now.
Yeah, so certainly echo Carolyn's points there about the need for multilateral cooperation. At the end of the day, the climate environmental crisis is an international crisis by its very nature, and it necessitates a multilateral response. Progress obviously has been slow for reform, and I think it's important at this stage too to point to who the kind of primary culprits are there. We're speaking about different responsibilities, like the role of wealthy nations in actually holding back progress. Those like the UK, look at the UK's role in ISDS. It's enormous. So I think important there to look at the context and the history there of who's been the kind of primary group of countries actually holding back progress. On the question of fossil fuel subsidies, I think there's two points here to consider. So the research that we uncovered found that in the last 5 years, the value of UK support to fossil fuels through subsidies, through tax support, amounted to around £12 billion annually on average. So that's since the Paris Agreement. So that's pretty astronomical in its figures, and it hasn't dramatically decreased since the Paris Agreement, which should have been a real moment, a catalyst to shift away from fossil fuel subsidy and support. And part of that is justified through our definition in the UK of fossil fuel subsidies, which very conveniently actually overlooks the massive kind of tax support provided to fossil fuel companies as well. So we've got this situation here where effectively kind of greenwashing in our narrative and how we're presenting ourselves internationally by saying that we don't have fossil fuel subsidies. And of course, the reality is, actually, if we look at kind of the international benchmarks for how fossil fuel subsidies are measured elsewhere, overwhelmingly, of course, they include tax support measures. Of course, they include tax breaks, tax reliefs. Of course they do, because that's obviously part of a broader package of support. So yes, there's a need to rapidly wind down fossil fuel subsidies in line with a 1.5 degree pathway, and do so in a way that's part of a just transition, a genuinely just transition. But also important here to revisit our definition of fossil fuel subsidies, which is completely inadequate and doesn't actually convey the scale of our support to the fossil fuel sector.
Thanks very much, Miriam. I know we've got to end any second, but just I had a yes/no question for Carolyn, which was just that, has the WTO agreed on a definition of subsidies? Do they at least agree on what it is?
No, not yet.
Okay, fine.
I mean, they have a definition of subsidies, but fossil fuel subsidies, there will be long discussions about which ones are the most important and how you characterize them and so on. Just if I can make a super last point, I think the key thing that we need to bear in mind is, what we need to do is to drive climate action everywhere, and to allow all economies to thrive. We want to avoid trade disputes getting in the way of countries being willing to take climate action. And that, to me, is why discussion at places like the WTO matter, because it's a place where you can sort of have dialogue that might help you come up with principles and approaches that avoid all of this getting tangled up in disputes.
Brilliant. Listen, thank you all so much. We've packed so much in an hour, and I'm sorry we've run over 3 minutes. That's my fault. But thank you so much. Really, really rich discussion, and huge thanks to Ruth and Trade Justice Movement for hosting this event. It's been fantastic. Thank you.
Thank you.
Thank you so much, Caroline, and also thank you to all of our speakers. Don't forget that we have a further 4 sessions coming up, and we're covering agriculture, border tax adjustment measures, COVID, and then a bit of a roundup at the end. So lots to get your teeth into. I feel like we should have another 4 energy sessions actually at some point. So thank you very much.
Thank you.
Thank you.